Hey gang, welcome to 40 Nights. We have a lot of ground to cover today, and I want to thank everybody for being here. But something strange happened yesterday. I did probably one of my best videos ever, and nobody saw it. So I don't know if I'm shadow banned or something weird is going on, but if you're in crypto, you should want to check that video out. And I don't know what happened, so I will ask for, very rare I do this, but if you could do a comment or subscribe, it would be very helpful to test what's going on. Maybe, I don't know. But if nobody's watching these videos, there's no point in me putting so much work into them. I'll just go do something else. Anyhow, thank you all for being here. But it took us a long time to get above 17,000, and that's a big part of the story today. So we're going to dig into all things Bitcoin, crypto, on-chain, see if people are placing option bets, see if people are taking profit, and what else is going on. We're going to see if space is hard, look at some CPI data. Everybody's talking about CPI report for Thursday, what that means for the markets. Remember, crypto is correlated with the market, so we have to look at this stuff. And we'll look at some demand issues for our key names, if there are. And that's it. So, as usual, it's edutainment, not financial advice. Let's look at the last week since we were here last. This is the crypto market performance over the last 7 days against Bitcoin. And you can see a couple of things are happening. One is, as everything is denominated in Bitcoin, you can see that some big names are up. Cardano, dark green, Solana, dark green, Near, Filecoin, etc. all doing pretty well. You got Ethereum up 10%, Binance up 12.8%, and a lot of action out there. And the question is, what's happening with dollars? When we denominate in dollars, you can see for the week, Bitcoin's up 4.4%. In fact, it's even higher now. It's at another $100 higher than it was when I put this together. And Solana up 50%, but remember, it got smashed at the end of December. But still up over 100% off the bottoms. Cardano up 26% for the week. I did mention ETH. But the question is, what's happening? Are the big guys bleeding against the little guys? Is it altcoin season? Where is the money flowing? And that's part of the mission today to figure out. But before we do that, let's look at stocks real quick. You can see here for the week, stocks, it was interesting. Microsoft is down 5.3%. Tesla down 2.7%. Couple of the, pharma companies down a little bit red too. And Google kind of flat. And that's really the market. So overall, it's positive. It's green. And there is a traditional indicator that looks at the first 5-day performance of equities and sees how it matches up. I can analyze 70 years of data. If you want to drop a comment below, I will do that tonight. I will do the report tomorrow on exactly what that means. But basically, if the first 5 days are positive, it bodes very well for the rest of the year, but we could dig into a lot of numbers around that. Let's talk about Microsoft. It was red. Why was it red? Well, going by the numbers, maybe the market doesn't like the fact that Microsoft is planning to invest $10 billion, if they can, in ChatGPT. I think it was a New Year's Eve video on AI and the importance. But the question is, why is Microsoft falling? Maybe the markets don't like the fact they're investing in this open source technology, or maybe they just realize, maybe Microsoft doesn't have an AI play right now as strong as they think, so they need to shore up the gap. I know a lot of people think this could be a threat to Google, but remember, Google have been crawling data for 20 years, more than 20 years, in fact, and that's what you need to be able to mine a really good AI solution. And ChatGPT uses just a fraction of that. And I don't know if Microsoft has all of the data they need. And maybe it's also because of this. When you do a search for AI type companies, Microsoft is missing from the list. But you have your Googles, your Teslas, your Palantirs, even Lemonade is on there, NVIDIA, Upstart, OpenAI, etc. So again, maybe it's a desperation to close up that gap. So let's jump into the good, the bad, and the ugly. We start with where there is most news, and that is good news today. And there's a lot of good news. Let's start with some Bitcoin call option action. I like to look at this stuff to find out exactly where people are placing their bets, kind of like at a casino. But you can see here, there are some 27th of January 2023 calls for an $18,000 strike, and somebody just bought 2,400 of them. That is quite a bit of money. So somebody's placing a big bet that Bitcoin will be above $18,000. in only 17 days. And we're not too far away from that. We're basically $500 away from that level right now. So that's interesting to see. In addition, there's some action over on GBTC. This could be the David Bailey effect. Himself and Dylan Leclerc are trying to force the hand of Grayscale to open up and let people have their assets despite the discount. And, you know, we bounced off 49% and shot right back up to 38.55% discount. It's still a hefty discount, but the pace at which it's going away is positive, but a long way to go. I'd like to see this discount around 20 to 25% before I get too excited. But people are definitely buying it up for maybe, you know, as we mentioned a couple of times before, maybe a BlackRock or Fidelity or Valkyrie. Somebody will acquire the asset, give Barry Silbert and his band of merry men some money to cover up some of the holes that they have in their balance sheet. Who knows? Let's look at some Bitcoin stuff from sentiment here. Now, this is part of the story today. As we shot through $17,000, Bitcoin's price, is up nearly 5% in 2023. Again, first week is important to look at historically, but the small profit opportunities for Bitcoin have been seized by traders, and yesterday was the second largest profit-taking day of the past year, and that the past 12 months. And we'll see what happens. But still, despite all that profit-taking, the momentum is still positive, still going up. Normally, you see things crash down after profit taking. That has not happened yet, and that's a positive sign. Now let's look at Bitcoin addresses. In profit are spiking, and this is the 7-day moving average. And you can see now, last time I showed this chart, the Bitcoin addresses in profit were just at 50%. Now they're 55.7%, which is a really positive sign. Andy, thank you, man. Appreciate you. Now let's jump and see what's happening with the Ethereum side of the house. How are they doing over there? But before we do that, we're going to talk about MicroStrategy, because that is tied at the hip to Bitcoin. And you can see here, MicroStrategy has rebounded very fast in 2023. This stock was down at 132 a few days ago, and now it's 190, which is a stunning reversal, but it's volatile as heck. And it is not. It should be completely correlated with Bitcoin, but it's not, because of all sorts of weird stuff. But if you look at the strength of MicroStrategy, that, like the option action, means people are placing their bets on MicroStrategy as a proxy for Bitcoin, because they expect Bitcoin to continue moving up, maybe to that same call option buyer of 18,000 in the next 17 days. So lots of good stuff happening behind the scenes. Let's look at the Bitcoin last active over the last 2+ years is also headed to an all-time high, and this from David Puel, who is now at ARK. But again, nearly half of Bitcoin supply has not moved in over 2 years. And we'll be at that all-time high in a couple of days, I reckon. Now let's talk about Binance. There was a lot of concern in the market. The reason we care about Binance is not because of Binance, but because if Binance were to implode, that would smash crypto. It would be a big, big shoe that would be dropping. But you can see here, markets brushing it off. They're not concerned. Binance over the last week was up 12%, hitting 275. Ethereum up 9 and Bitcoin up 4. They're all up a little higher. Ethereum is now 10, Bitcoin is now 5, and Binance is about 13%. So that's a good sign for the market. Now let's talk about small caps. They also seem to be coming back. The small caps is the light blue line here in this chart. You can see the return over the last month. Bitcoin 1%, large caps flat, mid caps flat, and small caps still down 5%. But their trajectory coming up is really fast, and that begs the question, is it altcoin season? Let's have a look. So here, according to this chart from blockchaincenter.net, it looks like, yeah, close to it. To be in Bitcoin season, you need to be under 25. To be in altcoin season, you need to be at 75. But the point is, it's bouncing up. So altcoin season, this chart says no, but it looks at 90 days. But if you look at the last month, you could argue it could be altcoin season. That's why I say yep. And we'll dig into some more data now. So let's look at Ethereum. This is the Ethereum addresses in profit. It's now at 52%. Not as high as Bitcoin, but still creeping up there pretty well with the rebound in the Ethereum price breaking $1,300, which is a positive for many. But there are some headwinds ahead. We'll talk about those in the coming weeks. So make sure you stay tuned for that. Now back to altcoins. This is from Sentiment here. You can see the altcoin euphoria spikes on another solid day for crypto. And, the altcoin rally has rung in a very welcomed new year for crypto. And whether prices continue surging depends on whether traders can temper their FOMO. As you saw with Bitcoin, there was some profit taking. But again, alt season, who knows? A lot of people are very, very excited in the Twitterverse right now. And we'll see where it goes. But we saw crazy, crazy action for many, many big names out there as well. Marina, hello, good to see you out there. Let's talk about Cardano. Cardano also has jumped an impressive 30% since the beginning of the year, since the start of the rally. 28 new addresses have popped up in the network that hold 1 million or more Cardano. So the whales are buying at this, what was a 25 to 26, 27 cent price. And whales have been dumping for quite some time. But now they're jumping back in. So just, always be careful being on the wrong side of a whale trade and watch them very carefully like we do here. But the trading volume also hit a 2-month high, including increasing large whale transactions. So somebody basically bought a truckload of Cardano and, at least 10 to 12 wallets, I think it was, that grabbed those shares, those tokens so cheap. Let's talk about another one on the rip is Gala Games. This is, gaming is one of those areas that has been very hot over the last week. A lot of people are talking about it. Unfortunately, gaming is not an area that I know anything about. But you can see here the market cap has nearly tripled in a very short window of time, in just a week. And the price and it is an Ethereum-based asset, is up 200% since the beginning of the year. And it exceeded 0.048 for the first time since mid-September. Again, big whales are buying this up. So when the big whales come in, start seeing value, that's a pretty bullish sign. But you got to watch them carefully because you don't want to be on the opposite end of the trade when they start to sell, because that's why they buy in the first place. Next is a quick recap of the winners and losers for the week. Top 50 market cap. This is from Arcane Research. Number one gainer is Lido, and it's top 50. So Gala, I think, is ranked about 90, so it's outside the top 50. Otherwise, it would be dominating this list. Lido is number 167% for the week. Solana 45%, Sandbox 28%, another metaverse type play. And then we have the losers, OKB, Ton, and Tron. I wonder what the relationship is between Ton and Tron. But even though they are losers, they only lost a tiny amount. So it's not all bad at all. But when the whole crypto market goes up and something stays flat, it's never a good sign. Let's switch gears for a second to the S&P 500 valuation. Big thank you to Sanjay for sharing this with me. This is from Charlie Bolello. It looks at the PE ratio of the S&P 500, and it ended 2022 at a 19.2 valuation. That is a multiple contraction of 16% during 2022. And remember, the average year-end PE for the S&P 500 since 1989 is about 19.6. So given that, that means if we go back to the averages, going back to 89, if history repeats, the S&P 500 should go up another 3.5% from here. But there's more stuff to come regarding the S&P. We'll talk more about that in a minute. So first of all, before we do, we'll talk about another stock, is Tesla. Tesla sold off very hard for many reasons. Obviously, Elon Musk has said that 70% of the drop in price was because he had to sell to pay for Twitter, which was bad. And then the other 30% because demand was seen as being soft and they're missing deliveries by an amount in Q4. But they did cut their prices in China and they received 10,000 orders in one day from the price cut. So when people say, oh, nobody wants EVs anymore, they certainly do in China. In addition, for the first time ever, Tesla Model Y entered the top 10 of cars sold in the United States. Obviously, it's been the leading selling car in California for a long time. But here, if you look at these numbers, the thing I want to point out is from Farzad and his Tesla channel, but everything is down. Every single car maker is down since 2021. Ford, and the first three cars are pickup trucks. And the fourth one is a RAV4. Camry is number 5. And then the Model Y number 6. So guess what's going to happen in 2022? Well, first of all, I think Model Y will destroy Camry. That's pretty much certain. So it'll be number 5 at least. It might even catch the RAV4. But the other thing to consider is we know this year the Cybertruck is coming. And we know Americans like pickup trucks. We don't know if they're going to like the Cybertruck, but definitely people who've never had pickup trucks like it for sure. And there's 1.5 million people on the waiting list. So I hope they get it out maybe July, start producing July, August of this year. That will be a big tailwind for the stock that is beaten to hell. Let's talk about another thing related to Twitter, which is Elon Musk, etc. But Twitter moves to the number 1 spot on the Apple App Store for US news following Elon Musk's takeover. So, it's interesting that Elon Musk has mentioned many, many times that Twitter is kind of the global town hall, and it gives immediate news from actual sources themselves. And the platform is like open sourcing the news, crowdsourcing the news, whatever you want to say. And it's working. If you want to get inflation, for example, Thursday, you're looking for the up-to-date CPI number released, you'll see it first on Twitter before you see it in mainstream media in most cases, with the exception of maybe Bloomberg. They're pretty quick. Now let's talk about some euro area inflation. It's dropping like a stone. So good for everybody over there in Europe. I see a lot of you out there. But December's reading came in at about 9.2%. I've been talking about single digits inflation in Europe for a while, with the exception of the UK. They are still at 20%, but that's also coming down fast. Good for them. But the Eurostat said this, and here, slower growth in energy costs is the main reason for the moderation. Food is still up there, and this reflects slowdowns in Germany, France, Italy, and Spain, I think. So much better than expected. 9.2, I think the expectation was about 9.6, 9.5. It came in below that. And why do we care? Well, inflation matters a lot. We'll get to that in a minute. Also, I thought this was very interesting. This was the average age of people that actually leave the labor market in Europe. And you can see here, the French like to stop working earlier than their peers. In most cases, the average age for people to retire in France for males and females is 60 years of age. UK, it's about 63 for females, 64 for males. Canada, it's about 62 for females, 64 for males. US, both the same, 65. And Japan, 67 for females, 68 for males. I thought it was interesting that the Japanese work so much harder and longer. So nothing wrong with that at all, but it's, life is about enjoying your time. Okay, let's switch gears. Let's talk about asset flows. Digital asset investment products saw outflows of about 9.7 million, highlighting the continued mild negative sentiment that has persisted over the last 3 weeks. Boom, boom, boom. Negative, negative, negative. But it's coming back up, and I expect this week it'll actually be positive. Now let's look at some of the asset categories and where the money is flowing. So Bitcoin saw minor outflows, about 6.5 million for the 3rd week in a row. But with all the bullishness now, I think that's going to turn around real fast. Actually, I'm very confident it will. And over the same period, the short Bitcoin products saw minor inflows of 1.2 million. So there is a little bit of that bearishness still nagging on, but it's very small compared to some of the big flows we saw recently, especially over the last couple of months. Now, Ethereum continued with its negative streak, seeing minor outflows of about 3 million, marking its 8th consecutive week of outflows. XRP bucked the trend with 3 million flowing in, which is about 9% of the total XRP assets under management. So that's a big percentage. And people are hoping for some clarity with that SEC case as well. And apparently, it's looking favorable. Polygon flat, Solana flat, Litecoin up a little bit, Binance up a little bit. And that is kind of what the world looks like there. Now let's talk about CPI history, because everybody's talking about this. US CPI is being released on Thursday. We got some numbers out of Europe already. But this is the history I put together of all of the CPI, basically year over year numbers. And JP Morgan Trading Desk sees an 85% odd that the CPI print will push the S&P at least 1.5% higher. And the expectation for December, I think, is around 6.5%. If we get lower, it'll be great. Now, just to put together this little graphic to show how it has developed over time, and you can see the green line, the two big, thick, fat lines on this chart, and this is 10 years of history, 11 actually. And the orange line is where we are today, 2022, and it'll switch to 2023 real soon. When we get that final number in there, I think it'll be around 6.5. So the trajectory it should continue to come down. And then the green line is 2021. You can see how that rose during 2021, coming from about 1%, shooting up to 7.5%, and then continuing up to nearly 9% in the year. So that's kind of staggering. Now, the reason this is important is because everybody expects 6.5% CPI to come out. And the question is, if it comes out above 6.5, like 6.6 or above, that could be bearish for the markets, which would bring down the traditional stock markets, which would also bring down crypto. So we'll see what happens. And again, these are JP Morgan estimations. If the print is between 6.4 and 6.6, that could be considered bullish. I should say 6.4 to 6.5. That should be considered bullish for the market. And if it is below 6.4, that'd be very bullish. Now, the 6.4 to 6.5, JP Morgan expect that the S&P 500 could rally 1.5% the same day. And if it is lower than 6.4, the rally would be about 3 to 3.5%, which is kind of staggering. So it'll be an exciting day. And I think given all the numbers and all the data, it looks like it's coming down. Okay, time for some bad news, everybody. We always have to cover this. First of all, the fear and greed index is still flat, still 26, still fear, which is no good. Bitcoin hash rate is still making all-time highs, which is putting a lot of pressure on miners. You can see it spiked up and spiked down a little bit, but still there's no let up in the hash rate as we go forward. And that is a problem. And it's normally you have some correlation between the Bitcoin price and the hash rate. The hash rate here is blue. You can see over the last year and a half, it's just been going up all the way. And the Bitcoin price has just been languishing. So this is putting extreme pressure on the miners. But the miners have been performing very well as well this year so far. In addition, Bitcoin dominance is also falling since January 1st. It had a little bit of an uptick at the end of December, and then it's tanked down around 40.5% right now as we speak. And that also explains the altcoin FOMO that's happening. A lot of money is bypassing Bitcoin and crypto and going straight to other names, Binance, Ethereum, altcoins, like we mentioned. So that is weird. Now, a little bit of ugly news too. Never forget the ugly. There's always going to be ugly news. This is bad. So the World Bank slashed its growth forecast for 2023 by half to about 1.7%. And I remember saying back in December that I don't know what the World Bank is doing, because World Bank and the IMF had these very inflated 4% global GDP growth. And I was like, what the hell are they missing? And this is kind of the growth in all the world's top economies, like the United States, Europe, China, etc. Now, global growth has slowed to the extent that the global economy is perilously close to falling into a recession. And they did give a warning here. They said one of the key things, they kind of calling on global central banks to remain alert to the risk that aggressive tightening of monetary policy to fight inflation could really wreak havoc on the markets. And the new report called for discussion between central bankers to mitigate risks associated with financial stability and avoid excessive global economic slowdown in pursuit of the world's objectives. Remember, they've called on them before. I think they called on them back in, I think the IMF or the World Bank or somebody called on the Fed back in November. And here they are again, knocking on the door saying, you're breaking everything, guys. You're causing financial Armageddon. So we'll see. And you can see as well from this chart that issue of having high inflation combined with low growth, stagflation. And that's the kiss of death. Nobody wants that. And they see it coming. In addition, for those with credit cards, these are US average credit card interest rates. You can see they've spiked above 19.07%. This is the highest rate in 27 years, ladies and gentlemen. Do not hold balances on credit cards, because those credit card companies will screw you. So be very careful out there. And this is nasty. I have two cards. I looked at the fine print and they're both north of 30% interest rates, which is ridiculous. But just don't carry balance. Pay them off as quickly as possible. And in final piece of news, which is kind of related to Elon Musk and SpaceX and everything else, but space, like cars, is hard. The Virgin Orbit stock tanked because they had a failed mission to reach orbit. And that was their 6th mission to date and its 2nd launch failure. So everybody, don't get on a Virgin Space aircraft. Also, they have about $50 or $60 million left on the balance sheet. They're probably not going to make it because space is expensive and space is hard. So with that, everybody, thank you all for being here. Happy Tuesday. I'm interested to see if anybody will see this. Well, we have maybe 2,000 people watching live, so that's more than yesterday. So appreciate you all. Thank you for the likes and be safe out there. Things are looking okay so far. And remember, drop a comment below if you want me to analyze that famous historic indicator of the first 5 days in January. I think it'd be an interesting one to have a look at. Thank you all. Thank you all for the stickers too. See you.